May, June 2020. The first question says, which are examples of bookkeeping? When we talk about bookkeeping, it's just about recording transaction. So entering details of a check is part of a recording transaction. So what are the examples? Entering is part of it. Entering details, whatever you see entering details are part of it. So entering details of a check is bookkeeping. Entering details of goods purchased is bookkeeping. Producing an income statement to calculate the profit for the year, that is accounting. So that is accounting because it involves computing. So it's accounting, it's not bookkeeping anymore. Yeah. Then 4, recording details of credit sales in the account of a credit customer. That's also bookkeeping. So the answer is 1, 2, and 4. So it's B. Question 2. How does a trader use the information provided by a financial statement? What do we use a financial statement for? We use it to compare the performance of the business year in, year out. But that's not the only thing you use financial statement for. You can also use it to compare your business with those of your competitors. Mm-hmm. That is when you apply the principle of comparability. That's the last question there. I think the last question talks about comparability. Yeah. Question 35. So you can use it's one of the reasons why we prepare our financial statement, to compare our business with those of our competitors, not just our business of this year compared to last year alone. So do you get the point I'm making here? Do you get the point or not? Yeah. They say, what does a trader use financial statement for? We use it to compare the business performance, because as soon as the financial statement is produced, or as soon as the financial statement is prepared, we're going to know the profit for the year. I'm going to know the value of our assets and liabilities, yes or no? So these are basically the performance of the business. So if our profit is increasing, it means we've done well than last year. If our profit is falling or we're making a loss, it means we are underperforming. So that is what the point is. So that's the first thing. The other reason why we could prepare our financial statement is to follow the principle of comparability, which means that you can compare your financial statement with those of your competitors. But when you don't prepare a financial statement, there's nothing you want to compare. Yes. Is it clear? Yes. Question 3.
But sometimes it's hard to compare because they're using other methods.
No, except for depreciation. Because in accounting, it is international accounting standard. So accounting in Libya is the same as accounting in UK, wherever. Because you have to use the international accounting standard, IAS.
Yeah.
Clear? Yes. Question 3. A trader bought new fixture. He paid half of the purchase price in cash and agreed to pay the balance in 2 months' time. How does this purchase affect the accounting equation? The asset of equipment or assets has increased. Mm-hmm. But owner's equity does not have any effect with owner's equity. Then the liability has also increased. Yes. As soon as he pays, then the asset of cash, current asset would reduce. Here, non-current asset has increased. So when he pays, current asset would reduce. Liability would reduce. Clear?
Yes.
Okay. So question 3 is D. Question 4. On 2nd of April, Nina received a check from Sava, a credit customer. On 12th of April, the check was returned unpaid by the bank. That is a dishonored check. Yes. A dishonored check will have a debit balance. Do you understand? Yes. In your cash book, dishonored check is always on the debit side of your cash book. So the bank is giving it back. So the bank will have the credit. Clear? Yes. Question 4, that's D. Question 5. Anne is a trader. On 1 of April, Cindy account in Anne's ledger showed the credit balance of $520. The following transaction took place during April. Anne returned goods worth of $30. That will return goods will be, that means there will be a credit note from Cindy. Mm-hmm. So 30 will be deducted from the 520. I think that is clear.
Yes.
So on 14th of April, Anne bought goods 210 from Cindy and paid cash. That was a immediate payment, so it doesn't have anything to do with the transaction. Do you understand?
Yes.
So in Cindy's account, the statement of account of Cindy would have 520, which is the total invoice, minus the credit note, which is 30. So the balance is 490.
So when they say paid in cash, it's not in the
cash. Paid in cash, it's an immediate payment. It doesn't involve trade creditor anymore. Okay. Trade receivable, sorry.
Yes.
So question 5 is A. Done, right?
Mm-hmm.
Question 6.
Okay.
What?
No, 6.
Question 6. Goods bought on credit by Tumelo from Tebego are returned before they are paid for. Tumelo keeps a full double entry. Where will Tumelo record the returned goods? Purchases, you bought goods, that is purchases ledger. And when you return it, that will be in the general ledger.
Mm-hmm.
It will be in the general ledger, under your general ledger, because returns are not always. So not all customers will return. So you don't have a personal account for returns. You have an individual account for purchases, but not for purchases returns.
Yes.
Returns are general ledger. Is it clear?
Yes.
Question 7. Dave supplied goods to Peter on credit. On 1 April, Peter owed Dave 440. Dave sent or received the following documents in April. On 7th of April, there was an invoice of 360. On the 12th of April, there was a check payment for 429. Then on 13th of April, a debit note. A debit note would have come based on the return of those goods.
Mm-hmm.
And as soon as Dave received the debit note from Peter, Dave would issue a credit note. Do you get it? So
Yes.
the value will be the 440 which was owed before, plus 360 on the invoice, which is 800. So a payment was made of 429. Payment of 429 was made. Then the credit note. You less the credit note. Where is it? So we have 800 with, yeah, I did it somewhere. Yes, 440, that's 800 minus, the payment on the debit note is 429. It will be 421 minus 50. Please let me calculate it again. We have we have 800 which was the value now, minus 429 minus 50. That's 321. It's 321 minus 11 if the payment was made on that at the end of the month.
321.
Minus 11.
Wait. Plus.
Discount will be given, right? But you won't give discount until payment was made.
Oh yeah.
So the check will still be 429. If the payment is made on the 30th, then you have to take the discount away. So the value is 321 minus 11, which is a discount, gets 310. Is it clear or not?
Yes. Yes.
So it's B. Question 8. A business sold goods with a list price of $50 each. The term trade where trade discounts for more than 20 items bought, 10%. So cash discount